What is corporate finance? Corporate finance is the area of finance that deals with how companies raise and use money and how they make decisions to increase the value of the company for the shareholders. Sounds simple, right? Well, not really. Corporate finance is very complex and challenging, and it involves a lot of math, accounting, economics, and law. But don't worry, we are here to make it simple and fun for you. Corporate finance has three main activities: investing, financing, and dividends. Let's take a look at each one of them. Investing is when a company decides what to do with its money, such as buying new assets, expanding into new markets, or acquiring other companies. Investing is like shopping, but with a lot of analysis and planning. A company has to figure out how much money it has, how much money it needs, and how much money it can make from each investment. A company also has to compare different investment options and choose the best one. This is called capital budgeting, and it involves tools like net present value, internal rate of return, and payback period. These tools help a company to estimate the future cash flows and profitability of each investment and to pick the one that maximizes the value of the company. Financing is when a company decides how to raise money for its investments, such as issuing stocks, bonds, or loans. Financing is like borrowing, but with a lot of costs and risks. A company has to figure out how much money it needs, how much money it can get, and how much money it has to pay back. A company also has to balance different sources of financing and choose the best one. This is called capital structure, and it involves tools like weighted average cost of capital, leverage, and credit rating. These tools help a company to measure the cost and risk of each source of financing and to pick the one that minimizes the cost of capital. Dividends are when a company decides how to distribute its profits to its shareholders, such as paying cash, buying back shares, or reinvesting in the business. Dividends are like sharing, but with a lot of trade-offs and expectations. A company has to figure out how much money it has, how much money it wants to keep, and how much money it wants to give away. A company also has to consider the preferences and reactions of its shareholders and choose the best one. This is called dividend policy, and it involves tools like dividend yield, payout ratio, and signaling effect. These tools help a company to determine the amount and frequency of dividends and to pick the one that maximizes the shareholder value. So, as you can see, corporate finance is all about making smart decisions with money, and it requires a lot of skills and knowledge. But it can also be fun and rewarding, especially if you enjoy solving problems, analyzing data, and making an impact. Corporate finance is not just for boring accountants and bankers. It is for anyone who wants to learn more about the world of business and finance. If you enjoy the video, subscribe and share. Thanks for watching.